please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good morning and welcome to Power Breakfast on CNBC TV18 in the Mumbai News Centre. I'm Mangla Malu. With me is Ekta Batra. Ekta, yesterday we came off the highs but still managed the 20 and the 50-day moving average. And today the SGX Nifty indicates another tug at that 10,000 mark.
Yes, absolutely, Manglam. Well, let's see whether we manage to sustain 10,000, whether we go further lower from where we are at. But we have a lot to reckon with coming out with numbers, not to mention TCS, but that's post-markets, and a lot of pharmaceutical news overnight. So a lot to work with this morning. These are top stories. US markets close at record highs yet again. After the Fed signals it will raise rates in December, Asia extends the global rally.
Just 15 days after its rebirth, the Prime Minister's Economic Advisory Council gets into a huddle for the first time, identifies 10 areas to get cracking as it acknowledges the growth slowdown.
All eyes on TCS as it reports Q2 earnings. Subdued quarter expected. Cross-currency revenue growth seen at 1.5 to 2%. Indecent 2 reports numbers today. Watch out for any announcement with regards to their deal with Bharat Financial.
Huge relief for Sun Pharmaceuticals. The US FDA closes the inspection and gives a clean chit to the pharma major's Dadra unit.
And in macro cues today, August IIP seen higher at 2.5% on restocking of inventories post-GST, which is expected to aid manufacturing momentum. CPI for September seen hardening to 3.56%, while food inflation is likely to soften on a month-on-month basis.
Right, let's get a handle on what's taking place in the Asian markets. It's a lot of green on the Asian screen, especially after the Wall Street. That one closed at record levels in yesterday's trading session, and that came following the latest minutes from the US Federal Reserve, which indicated that their federal funds would expand, federal fund rate would expand if the medium-term outlook remains the same. So that means basically there was a hint at a December hike, and as a result of that, we're seeing the Nikkei, which is up. Remember, the dollar index is at a 14-day low, despite which we're seeing the Nikkei gaining. In fact, the Japanese index is at a near 21-year high back at the levels of 1996. That's not all. Take a look at the Korean markets as well, up nearly 0.25%. Similar other moves that we're seeing in the Straits as well as the Taiwanese indices. Both of them should come up for you. And the SGX Nifty, remember yesterday for our markets, we closed below that 10,000 mark. The SGX Nifty knocking at that door again once more.
Okay, well, let's tell you about Wall Street. It closed higher after the Fed Reserve released minutes of its previous meeting that showed it believes the economy is strong enough to withstand another rate hike in the month of December. So all three major indices ended at record levels in yesterday's trading session, as you can see on your screen. CNBC's Hampton Pearson gets us a wrap of all what took place on Wall Street. Let's go across.
U.S. stocks making some gains, the Dow adding 42 points, the S&P up 4, the NASDAQ higher by 16 points. Minutes from the Fed's latest policy meeting showed that the nation's central bankers are struggling with what to do about persistently low inflation, but it looks like the Fed is on track to announce a third interest rate hike this year at its December meeting. Facebook COO Sheryl Sandberg appearing on Capitol Hill today. Sandberg there to meet behind closed doors with Representatives Schiff and Conaway, the bipartisan leaders of the House Intelligence Committee that's investigating Russian interference in the 2016 presidential election. Russia is believed to have purchased more than 3,000 politically divisive ads on Facebook in the months leading up to Election Day. Coach No More, the luxury brand announcing today that it'll begin operating under the name Tapestry on October 31st. The company, which operates other brands like Stuart Weitzman and Kate Spade, saying the name change reflects creativity, craftsmanship, and inclusivity. That's the action from the U.S. markets. You have a good trading day in India. Back to you in Mumbai.
Well, Coach won't be Coach anymore. They will change their name to Tapestry. Interesting development taking place out there. But talking about the markets itself, we have Chairman and CEO of BlackRock, Larry Fink. He's of the opinion that global economy is in a better position than expected, and there is a rise in interest in the emerging market space. Listen in.
I think what's going on is we're seeing a change in market sentiment. We're seeing continual growth in China, above trendline growth in Japan. So when you have the second and third largest economy doing much better than anticipated, then alongside greater political stability in Europe, an aggressive central bank, strength in the banks, you have a Europe that's growing at 2.5%. So you're seeing the economy doing so much better as a result.
The global economy.
The global economy. As a result, we're seeing clients looking to put more money to work. One of the greatest problems we still have in the world is how much money is sitting on the sideline. U.S. multiples are higher than any other part of the world. We are seeing a surge in interest in emerging markets in Asia and Europe. If you're going to do an asset allocation, over an intermediate cycle, that might be the better allocation today. But let's be clear, the United States deserves a premium. Our companies are stronger. They're better managed across many industries. So I actually believe the U.S. deserves a premium to the other markets.
Okay, well, the inflation debate is heating up inside the Fed Reserve. Minutes from the central bank's September meeting showed that many participants were concerned that sluggish readings could in fact prove persistent rather than transitory, which would warrant a more cautious approach to policy normalization. CNBC's Steve Leisman gets us the highlights of that.
In their minutes that they think an increase in the target rate later this year is likely to be warranted. But a smaller contingent said it was data dependent, and a smaller contingent still said, you know what, rate hike should wait till inflation is clearly on the path to a 2% goal. All agreed that they were in favor of gradual rate hike increases. Now, there were substantial debates in the September meeting over inflation and over wages. On inflation, most forecast that inflation was heading towards 2%, but they conceded it may take longer than anticipated. Many judge softening of inflation was due to unique reasons, but there's also a lot of worry about persistent forces that may be keeping it low. Because of low inflation, some said patience in removing accommodation was indeed warranted, and a few even thought no further increases were called for. Remember, that's a smaller contingent of the whole, but there is this sort of strong feelings on both sides of this issue when it comes to inflation. On the issue of wages, most expected wages to pick up over time, but several said the absence of wage pressure meant they have to sort of rethink what the lowest unemployment rate for the economy could possibly be. A couple cautioned on the other side here that acceleration may already have begun in wages, and they had to be careful of higher inflation because of that. Finally, guys, the Fed largely expected the hurricane effects on payroll, so there wasn't much concern there, much difference in the outcomes from the hurricane data that they've seen so far or to that point. So a big debate on inflation, a big debate on wages, but ultimately they decided to hold off and kind of signal a rate hike was coming. Maybe the outcome of this is a little bit more dovish than I would have otherwise thought going in, guys.
Okay, well, Canada's Prime Minister met with the US President in Washington for the fourth round of talks on reworking the 23-year-old trade accord. Trump has repeatedly threatened to pull out of the NAFTA agreement, but Justin Trudeau, tried to tell him that Canada is not America's problem. CNBC's Kayla Tosh reports on the same.
U.S. trade officials this week are expected to put forth new proposals seen as so contentious by lawmakers, business lobbies, and the other NAFTA countries that some have suggested the White House is purposely putting out so-called deal breakers to justify backing out of the deal. Canada's Prime Minister Justin Trudeau held a closed-door meeting with the leading trade committee in Congress, an uneasy alliance with both parties wanting to preserve the deal without major disruptions. Following an hour-long discussion about NAFTA, Trudeau visited with the president, who called Trudeau a very good friend, but didn't back down from his prior criticism.
I've been opposed to NAFTA for a long time in terms of the fairness of NAFTA. I said we'll renegotiate. And, I mean, I think Justin understands this. If we can't make a deal, it'll be terminated, and that'll be fun. They're going to do well, we're going to do well. But maybe that won't be necessary.
All right, then let's shift focus to the European markets. In fact, if you take a look at the three frontline indices, the CAC, DAX and FTSE, you would see little change out there, mild outperformance seen by the German index. But beneath the surface or across the periphery, we keep a lot of stocks which were moving. In fact, the investors, they continued to monitor the ongoing political uncertainty. The euro surged as the Catalonian crisis saw some relief. The Spanish index, that one was the star outperformer, gained almost 1.5% as worries eased a bit about Catalonia's push for independence. But if you take a look at the other peripheral indices as well, there was a sharp underperformance of the Greek index, which is the ATHEX, and that was primarily because, and this time it wasn't banks, it was a lot of the medical stocks, plastic stocks, mills, as well as construction companies, which lost anywhere between 5 to 7%. Outperformance seen also in the FTSE MIB Italian index, which was up about 1%. If you take a look at the Ukrainian index, that one too outperformed. Just a look at the emerging markets out there. The Russian index gained about 0.75%, while the Brazilian index was down by about 0.3%. And going on to the latest in Catalonia's crisis, Spanish authorities have given Catalonia's separatist leader 5 days to explain whether his ambiguous statement on secession was a formal declaration of independence, warning that doing so would trigger direct rule by Madrid under Spanish constitution, threatening to invoke a section of the Spanish constitution to assert control over the country's rogue region. Prime Minister Mariano Rajoy said that Catalan president's response to the central government's ultimatum would be crucial in deciding events over the coming days.
Okay, well, onto the currency space then. The dollar is on the back foot against a basket of currencies, recovering a bit after sinking to 14-day lows as investors took note of the Fed members' concerns over the inflation outlook as of now.
In the world of commodities, crude oil prices slid after rising for 3 consecutive sessions as U.S. fuel inventories rose despite efforts by the OPEC to cut production and tighten the market.
And from precious metals, gold pairs losses after Fed minutes, which showed a rate hike in December was likely.
Yesterday on Dalal Street, the benchmark indices, they wiped out the morning gains in the later part of the session as the Sensex was down almost 100 points. The Nifty too ended below the 10,000 level. As the SGX Nifty indicates, we could see some green on the screen. For more, Ekta joins us for what are the other cues we're watching today, Ekta?
Yes, absolutely. Well, like you mentioned, Mangalam, you know, the markets failed to sustain yesterday's momentum at all. But what we saw is that participation has actually come down in the past 2 to 3 trading sessions. So yesterday on a net basis, the FII's net sold 108 odd crores, the DII's net bought around 234 odd crores. It's positive that that participation has actually come down in the past 2 to 3 trading sessions. So yesterday on a net basis, the FII's net sold 108 odd crores, the DII's net bought around 234 odd crores. It's positive that the FII net sell has come down to around 108 odd crores, but participation itself has been a bit slower. So let's see, maybe it is because of ahead of Diwali, etc. But in any case, that would be a key thing to monitor. This morning, the global markets are steady. We have the Dow, which is at record highs on the back of the Fed minutes indicating a December rate hike. But remember that right now we're not really following global cues. For example, the Hang Seng, the Nikkei, all these indices are at multi-year highs, 10-year highs, 21-year highs, close to those levels. But we are not even able to get back to our old highs at this point in time. We're coming off the day's highs for our markets like you saw yesterday. So that conviction or that correlation with the global markets is yet to be seen. Results is going to be top of mind today. So we have TCS as well as IndiSyn, which is coming out with numbers. Remember that TCS has actually been quite resilient as compared to the others, not as much as say HCL Tech and Wipro, but nonetheless compared to Infi, TechM on a year-to-date basis, TCS seems to have managed to hold its head above the water. But look at the performance of IndiSyn. So even if IndiSyn doesn't really move on numbers today, which it generally doesn't, look at the outperformance that IndiSyn has showcased versus the Nifty Bank. IndiSyn up 56% year-to-date. date versus the Nifty Bank, which is up around 34%. The other thing that I'd watch out for is Reliance Industries comes out with numbers tomorrow, so we're probably going to see some amount of movement, expected to be a steady set of numbers. And I would watch out for the mid-cap as well as the Bank Nifty, considering the kind of, they gave up gains yesterday, plus what's happened with Lakshmi Vilas and South Indian Bank. That kind of sets the tone in terms of the numbers as well. News on Sun Pharma, Dadra EIR is positive. It's going to spill over to the pharmaceutical space. I'll be watching out for macro Q, September CPI, August IIP, which is going to be post-markets as well as a lot of the other earnings.
All right, Ekta, a lot of the other earnings, that is what you said. But on a programming note, get 4 of our market walas today directly at 4:30 p.m. from the BSE. But what are the other stocks you're watching out for, Ekta?
Well, yes, I would be watching out for all of those stocks which are going to be coming in from our special program, Diwali programming, which is going to take place this evening. But getting back to stocks in focus, well, the Sun Pharma stock will be the one that I'll be watching out for closely. The EIR Establishment Inspection Report for the Dadra unit had come in last evening. And interestingly, we had a lot of trouble from a couple of companies when they don't release their 483s. But when it's an EIR, it's the first thing that comes out. But in any case, Lupin also, they held a call with regards to acquisition of Symbiomics to aid their specialty portfolio in the US. Lakshmi Vilas Bank, NS Venkatesh, ED and CFO has resigned, but that he's moved on to Amphi, we understand. India Bulls Ventures developed a mobile app for instant personal loan disbursements to new customers. HCL Info, which is a BM on 14th October to consider rights issue. Larsen and Toubro sale of stake for around 522 crores in EVAC Alloys. So that would be in focus. Hero Moto, actually very... they've come out with some statistics. They've said that they've sold 2 million bikes and scooters in July to September quarter, largely known. LT Foods inaugurates ready-to-heat facility in Houston. TV18 broadcast, Network 18 broadcast will be reacting to numbers. Standard disclosure, they are basically the owners of this channel. And separately, however, I would expect Sun Pharma to be the stock to watch today very closely. It's probably going to be the stock of the day. Newly appointed Economic Advisory Council to the Prime Minister met for the first time yesterday. During the meeting, the 5-member panel picked 10 key issues that it will initially work upon. These issues include economic growth, employment and monetary policy. The fiscal framework, agri and social sector schemes will also be on the PMEAC's initial agenda. Addressing the media after the meeting, the head of the council, Bibek Debroy, said that there was consensus amongst the members of the council on the reasons for the slowdown in India's growth.
Whenever we do something on monetary policy, it will be in consultations with the Reserve Bank of India. We will take on board the views of the RBI. We will take on board the views of the MPC. But it is always possible to have not necessarily a contradictory view, but another view that complements and even supplements what the RBI is doing.
I think this group will contribute a really technical, professional inputs into the policy making process. It will be a sounding board for ideas from different institutions, departments of the company, and it will be a cooperative effect.
Today, during the long deliberations that we had, which started with, actually we had invited Dr. Arvind Subramaniam, Chief Economic Advisor from the Ministry of Finance, who gave a very perceptive presentation to all the members. We will be using the resources of the Niti Aayog in helping us in moving this whole agenda forward.
All right, moving on then, the government's direct tax collections, they've seen a growth of nearly 16% in the first half of this financial year. This growth rate is bang in line with the budgeted estimate of 15.7%, also faster than the growth rate clocked in the April to August period. However, the gross collections, which is without the refunds to taxpayers, stands at just over 10%. So this also points out to the fact that there hasn't been any major dividend coming in from demonetization, and the centre's coffers remain stretched due to the low RBI dividend and weaker spectrum receipts. All right, let's shift focus to the earnings season, and TCS is on our radar this morning. The IT bellwether reports its numbers. Anisha now joins us with a quick preview on what to expect. Anisha, subdued quarter expected. The stock was active in trade yesterday.
Well, yes, the stock was active in trade yesterday, and for the entire sector, the expectations are a bit subdued, and TCS is no different. To run you through the headline numbers, we're expecting a rupee revenue growth of around 2.6% to come in at around 30,350 crores, and a bit number of 7,500 odd crores. And if you look at the margins, now last time they had declined and disappointed a bit on account of the wage hike and coming at 23.4%, but this time we're expecting it to improve and come at around 24.5%, an improvement of anywhere between 80 to 100 basis points. That because there is no wage hike this quarter, as well as the visa cost will not take impact in this particular quarter. The profit is expected to go up by around 4% to come in close to around 60. Other income is also expected because remember they had done the 16,000 crore buyback, so the other income might be a bit less. In terms of key things to watch out for, the management commentary had been a bit cautious of late. Remember, Nomura had met the management and the stock had reacted post that because they said that the BFSI recovery got pushed to FY19 as well. They had also mentioned that they're looking at a large deal in the insurance space in Q2 to get finalized. Let's see whether that happens or not. Any guidance coming in terms of the margins, because remember 26 to 28% is their constant currency margin guidance. Quarter 1 was weak. Quarter 2 is expected to be below that if any revision comes in that. Back to you.
That was the IT opener. Now moving across to the non-strikers end, we have the banking pack. The opener from there, IndusInd Bank, reports its numbers. Abhishek, steady as ever?
Steady, Mangalam. No, but the key thing to watch apart from numbers would have been the acquisition with respect to Bharat Financial. However, they came out with a press release last night wherein they mentioned that they will hold a board meeting on Saturday at about 11 AM to consider a strategic combination and issue warrants to promoters by way of preferential allotment. So my sense is that going into the earnings, there won't be any announcement with respect to Bharat Financial merger, but it will happen on Saturday. Key things to watch will be the loan growth. Loan growth about 25% will be very positive. Remember that in this quarter, CV sales have picked up post GST. They have grown at least by 25% plus. So that should aid in loan growth. Remember that last quarter, CV loan growth was close to 13% or below. Net interest margin at and about 3.8% will be positive. For last 3 quarters, it has been at a steady pace of 4%. Gross NPA expected to remain stable. No hiccups as such. But we will watch out for management commentary with respect to the 40 cases that are under NCLT issued by RBI. Credit cost on a quarterly basis below 20 basis point will be positive. Our poll suggests an NII growth of close to 26.5%, but for last 7-8 quarters they have grown above 30%, while net profit to grow at 25.5%. Largely the range has been between 25 to 30%. Back to you.
For Power Breakfast, it's time to take the power medicines this morning. Sun Pharma, that one's received an EIR or Establishment Inspection report from the US FDA for the company's Dadra formulation facility. Ekta, likely to be the stock of the day?
Yes, definitely. Now, you have to look at it from the context that a lot of companies have been receiving EIRs, after which you see the approvals picking up from that particular facility. So maybe it's a bit of a change of a strategy from the US FDA that they'll issue an EIR and that's when your approvals start. So for Dadra, this is a big positive development, and for Sun Pharma as well, because the inspection took place in April 2017. We had, I think, broken the story that they had received 11 observations at that point in time. And obviously, there was a lot of concern over those 11 observations because this is the second largest plant for Sun Pharma when it comes to India for the US business. You already know that Halol is currently under a warning letter. They had a re-inspection with 9 observations in the month of December. So that uncertainty is there. So over that, after Dadra also gets 11 observations, there was a lot of uncertainty on the street that whether that too will eventually face a problem. So and now the news is that they've managed to receive an EIR, Establishment Inspection Report, within 6 months of that particular inspection taking place. It took place in April 2017 and they've received an EIR now. So the reading is that yes, fundamentally it doesn't change things because there was no escalation of the observations. So they were still manufacturing and producing for the US markets, but now there is no risk of it escalating. And that means that they are focused on compliance as well. If you can resolve an issue within 6 months, then it provides more confidence that Halol will probably also see the light of day soon enough. They've already finished remediation for Halol, and they've re-invited the US FDA to come and re-inspect the plants as well. And Spark is likely to probably be in the green as well, because they had just mentioned that they're probably transferring, you know, a couple of their key drugs from which are filed from Halol. So maybe Dadra would now be one of those where they filed it too, and we could see some amount of confidence on Sun Pharma on account of that as well.
All right, Ekta, we'll keep an eye out on developments out there. Halol would be in focus, but Lupin will also be in focus today on the back of the acquisition, and there was the conference call yesterday.
Yes, it was a conference call that took place on this acquisition that they've made. Now, basically what they have done is that they've acquired this company which has one drug, which is called Solosec. Now, this Solosec has been, now basically the acquisition is around $150 million, inclusive of everything in terms of the additional payouts, etc. Now, this particular drug, Solosec, which is basically used for a very common indication in the US, bacterial vaginosis, which basically occurs in women, is between the age of 14 to 49, is basically different because it's a it's got a QIDP status from the US FDA. So that means that qualified infectious disease product. It provides them 10 years exclusivity in the US. What makes them different from the other drugs is that you need to only take one dose, whereas for the other drugs you have to take multiple doses or maybe 2 doses, etc. And hence there is a lot. Hence, you know, you'd rather take one dose and you'd rather stick to that particular one dose as opposed to taking many more doses. So it'll be interesting to see how this particular drug ramps up as well. You know, the market size of it is around $120 to $140 million in terms of peak potential sales according to analysts. So it'll be interesting to see how it ramps up. The net is that no, there's not much stress in terms of balance sheet because it's going to be internally funded for the company, and separately there's going to be you know, a focus in terms of building the specialty healthcare portfolio in the US and / the women's healthcare, branded women's healthcare, because they already have a drug called Methigene in their portfolio, and this basically adds to that. So they're taking these steps to do so, but nobody can guess how successful the drug is going to be as of now. So it'll be interesting to see what happens going forward. Let's listen in to the management who spoke last evening.
We've got tremendous leverage possibilities on our balance sheet itself. While there is some leverage because of our previous acquisition, we still have capacity to take on more. And there's, of course, a continuous cash inflows into the company from current operations. So to the extent can be met from current operations, and if necessary, we could always look at borrowings for further, you know, any other needs that we have.
Your DP status and the NCE exclusivity gives it, you know, a 10-year exclusivity. The potential is large. In the 6 million prescriptions for bacterial vaginosis that are written every year by OBGYN. And we expect this product to take a good share of that market, being the first single-dose oral treatment for BV. You can look at the total market size just with the 6 million prescriptions. The average brand price is between $150 to $250. So that's the total market size.
Finance Minister Arun Jaitley is on a week-long visit of the United States. CNBC TV18's Malvika Jain caught up with him and began by asking him as to how he perceives the Indian economy in the context of the recent IMF projections and growth challenges as well.
Obviously, everybody wants faster growth. And as somebody in charge of that department, we want faster growth. There is a challenge. And it would be absolutely incorrect for anybody to interpret a challenge to the economic situation as some kind of a crisis.
Sure.
Obviously, the economy is doing reasonably well. We can do much better. Important structural changes can have a transient impact, which they've had, but all indications are that things are improving and will improve. In fact, you just referred to the IMF projection.
Right.
Now, if you critically analyze the IMF predictions, without going into the fact that they may be a fraction plus or a minus.
RBI has also reduced the GAVs.
No, but at the same time, if you see from the current quarter, there is consistently an upward trajectory which is being projected. And if the upward trajectory takes you to a certain respectable level as far as growth figures are concerned, and then over the next few years it keeps on improving, in a larger management of an economy, you don't look at one quarter, you look at the pattern across the period.
Expect the growth momentum to continue.
That's what the IMF has said. That is what most other agencies are saying. And I think all the current indications and the potential of the Indian economy is that.
You did mention about the structural reform. GST is one of the prominent reforms that this government has introduced. You have made certain changes to help the informal sector, to help the exporters. Is this momentum likely to continue on the meeting on the 9th and 10th of November?
Well, it is. It is going to continue because
are rates going to be reduced?
You see, I won't make a prediction on as far as that is concerned. If you've seen, after implementing GST, it's such a major transformational changes that you review the market situation day to day. Now, two very important decisions which we took in the last meeting are with regard to exporters, because they are certainly entitled to quicker refunds. You can't block their capital. And secondly, you had to reduce the compliance burden on the small and the medium scale. To incentivize people to get into the GST net, you had to offer an attractive composition scheme. That's what we've done. Secondly, when you ask this question about rates, we followed the principle of equivalence. The pre-existing taxes, we put them in the closest bracket. And then suddenly you realize that the pre-existing situation was an absurd situation. And already over 130 or 140 commodities and many services, we've brought them down from the 28% category to 18 or 12, because originally they were being taxed both excise and VAT at the highest rate.
Other items in the 28% category
You see,
are going to be
obviously
taken out?
that will have to be always balanced. I've indicated that there is a scope for improvement, but that will have to be balanced with a revenue neutrality. You can't say that I have no money to spend for the government, but I am reducing the rates. Obviously, as the revenues goes up, your flexibility in taking that decision increases.
The fiscal deficit target, fiscal prudence is something that you've been really committed to. Do you think you can continue with that trend, or you might have to get a little lenient?
Well, I think I inherited an unacceptable level of fiscal deficit.
And you worked very hard.
And therefore, over the last 3 years, we've had a very good glide path. And we'll continue on a glide path. Now, how sharp is the glide? There is a flexibility in that. But I think the direction of the discipline that we've maintained will continue. And I think that discipline always is rewarded by the markets.
Well, my last question to you is about the fiscal stimulus. There is a lot of talk about that. Certain sections within the government also feel, especially at a time when, you know, the other central banks like the Fed, they are talking about withdrawing the stimulus. Do you think in India there is an opportunity to provide some kind of push, whether it's consumption?
I think we had, I had used a word when I was asked by the media. I said there are challenging situations and we'll respond to them. Now, your fraternity translated the word response into a stimulus. I didn't. And therefore...
if not a stimulus, then what? What is the government
doing? You see, according to me, you have to analyze the problem. The problem is that because of destocking, you had manufacturing growth dip in one quarter.
Okay.
You had, on the same quarter, the services sector go up. Thereafter, all indications indicate the core sector growth has gone up. The automobile vehicles sale seems to have increased. The PMI for both manufacturing and services is moving up. There is an upward trend in the global growth figures. Now, these are all the trends which have been coming thereafter. And therefore, whenever you have challenges because of, in a quarter or so, because of important structural changes, I think it would be very short-sighted to interpret those challenges.
But the private sector is sitting on a lot of, you know, underutilized
well, I think, therefore, as the demand picks up, those capacities will also get utilized. They won't get utilized in a vacuum.
So there's nothing specific that the government is going to do in that
No, I have not said that. I think we have a game plan in mind. We'll implement it as soon as we are in a position to announce.
All right, then after that we'll shift focus the cues coming in from the futures and option space for our markets. Yesterday, remember, the Nifty failed to hold the 10,000 mark, though it did manage to hold the 20 and the 50-day moving average. We saw the FII sell figure close to around 100 crores in the cash market. That was the lowest since September 18. So at lower levels, we did see a bit of buying in the index futures. The FI has bought about 700 crores, close to 9,100 long contracts added in index futures. That's roughly 15 long contracts added in index futures as against one short contract that was added. Keep an eye out in the index options as well. There was a purchase figure, but the internals, they were muddled on account of the Nifty Bank weekly options expiry. So let's take a look at a couple of strikes. The 10,000 call, the 10,000 put, both of them were fairly active. There was a lot of writing at the 10,000 put, which was later unwound as the markets fell. So combined premium on the 10,000 call and put is close to around 170 rupees. So that means the traders are perhaps playing for a range between 98.50 to about 10,150. We'll keep an eye out on that data point, but watch out for the Nifty Bank weekly options expiry today. The levels at around close to 24,100. 24,000 put has a lot of support or a lot of writing. The 24,300 as well as the 24,200 calls saw some writing. So we'll keep an eye out on that.
Okay, all right, Manglam.